Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, August 16th, 2011 is sponsored by Realtik. Alright guys, let's get right into the mix here. Markets are trading a little bit to the downside today. Dow Jones Industrial Average down 76 points, NASDAQ down 34, and the S&P 500 down 12. Basically 1% give or take a little bit on the indexes today. Bottom line is this, folks. It has been a wild ride for a couple different reasons. Number one, the S&P has rallied 100 points off the lows. Therefore, after 1 week of movement, and if I zoom out, you can clearly see from this low pivot down here, the SPY was at 110. We hit 120 at the highs today. At the highs yesterday, that's a 10-point move, or the equivalent of about 100 points on the S&P 500. That type of move tells you the market may need to pause a little bit. That's what we talked about last night to the Research Center members as a possibility, and that's exactly what's happening today. The markets are slightly on the downside, and again, it's been a wild ride on an intraday basis. First off, you have to note, number one, this is the first thing that I see when I look at this chart, the technical levels, how beautiful they are. What do we mean by this? Well, just take a look at this pivot low here today. The low in the early morning session, right after the markets opened, happened to be at a level of 119.20, 119.15. That level on the SPY, which again mirrors the S&P 500 here, is the tracking ETF, also coincides with the open yesterday, the pivot low from late morning yesterday, as well as the pivot high from last Friday. See how that level is so key and accurate? So as the markets were selling off early in the day, they hit that level and reversed. Then the markets traded all the way up, and this is even more key. You went right to what we call and what is known commonly as gap fill. Gap fill is always resistance. All right, so you have support here, major support on the charts based on trendline analysis, major resistance right here at gap fill. Look at how the market reverses off support and then again reverses off resistance. Truly an amazing sight here, and if anyone had any questions about whether or not technicals work, just look at the charts, folks, right here. It is amazing. In any case, the market reversed off of gap fill perfectly, so you would have shorted it there and you would have bought it here, and you'd be making a ton of money on an intraday basis today. But as the market pulled out back here at 12 o'clock, 12 p.m. Eastern Time, the reason for the pullback was because Sarkozy and Merkel, the key players from France and Germany, had a conference or press conference today, and that ultimately was not good. The markets did not like what they heard there. Basically, they came out pretty harshly on the southern European countries, saying you got to do balanced budget amendments. You got to do this. They even talked about a no-brainer for a financial tax on transactions in Europe. And again, that's something that the market did not like to hear. The market was hoping for more dovish talk on bailing out and so forth. They did not get that, and the markets went from basically the flat line all the way down to the Dow at this low was down 175 points, and that was all in 1 hour. So in 1 hour, the markets go from being flat to positive right here at the gap fill, which again was a short, and all the way back down to a low where they were down 175 on the Dow. The spiders at this point were down over $2 on the SPY. The markets at that point slowly started to reverse. Volume started to lighten up after that sell, and they've come back up a little bit, kind of going back inside of this little purple line and this upper level right up here. All right, and again, very, very important. Notice how you hit this level the first time today. You bounced off of it beautifully. Second time down, we all know, and again, you guys may not know because you're not a member of In the Money Stocks, or some of you aren't that are watching this video, but if you were a member, you know you never buy the second hit of a trend line, so this would not have been a buying opportunity, and you can see how it flushed through. You actually confirmed below to the downside, and you have now confirmed below this purple line back to the upside. That actually bodes neutral to positive for the remainder day, but what you want to look for now is a pullback of consolidation back to this level. And once we get back to this purple line, it may be a new buying opportunity for the end of the day. We're going to watch this very, very closely. If you do eventually get through this purple line back to the downside, obviously double bottom would be the next support level, and then the 200 moving average, and there's a gap fill down here in this range as well. But those are the major levels that you're looking on. And by the way, folks, again, just to note here, as we nailed last week's pivot low on the markets and got some longs in play, I'm continuing to hold those longs because everything's pointing to me that this is just a short-term pull pullback before another little bit of a leg up for the next week or so. But what I wanted to just mention, there's a 7-day free trial to the Research Center, 7-day free trial to the intraday stock chat. No obligation. You cancel before it ends, and you're never charged. So it's a beautiful thing there. Go to inthemoneystocks.com and sign up for that. Get involved. I give out the same information to our Research Center subscribers, whether they're a hedge fund in the Research Center or they're just a regular average investor. So you get the same type of amazing analysis that we get paid a lot of money from the hedge funds for on a premier basis. You get it right there in the Research Center and in the intraday stock chat. And again, if you're interested in having intraday live analysis, live trading calls, live swing trades given out, then that's what the intraday stock chat is for as well on an intraday basis. On the intraday stock chat, you hear me talk, you hear my partner talk, you hear everything that we're thinking and we're saying. You also see our live charts, and you ask us questions live as well. It's truly amazing stuff. All right, let's go to a couple other charts here. First of all, folks, what I want to show you, there's a couple key charts out there. One of my long plays that I'm currently holding is Hewlett-Packard. Hewlett-Packard is positive on the day. It's actually had a nice move up early, and then the selling obviously took care of that, but now it's bouncing back up to the positive side. And again, it just shows you how if you pick the right stocks, even in a bad market like today where the markets are down, close to 1% or they're about that point, you can still be in a good trade, and it's still making you money. You got to know what you're doing. Price, pattern, and time are the keys here, and then at the same time, you have to match those up, and if you can do that, you can be in winning trades no matter which side of the market you're on and which side of the market it's going, in that direction. All right, let's take a look at the dollar quickly, folks. Dollar is slightly higher today. Obviously, the Merkel and Sarkozy comments whipping the dollar. You can see the fall here on the dollar, then the pop back up on the dollar, now the fall again. Basically, the dollar's going inverse to the markets, right? As the dollar was falling into the noon session, what do we know about the markets? The markets were going up and going to the flat line. Then all of a sudden, as the dollar bounces strongly on the Sarkozy and Merkel comments, the markets comes back down, and then again we're seeing the markets bounce off those lows as the dollar has come back in. So it's really an inverse relationship again, and I think that's something that we all have to recognize and continue to understand, that the markets are going to go in the opposite direction of the dollar. The dollar's in control here because obviously the euro is going in the opposite direction. Everyone's concerned about the euro and the European situation, and that's exactly what it all stems from, folks. The currencies really tell all right now. The USO is down about 50 cents. Again, this has been on a wild ride today. We'll check out gold in a second, but you can see the volatility. I mean, intraday it's been a good whippy session. It's not like we're going up or down 400, 500, 600, 700 points on the Dow like we were last week, but just on an intraday basis, it's very, very whippy here on a market sense in terms of any chart you're looking at here. GLD, folks, is trading up $1.70. Interestingly enough, if we go to the chart here on the GLD, and I want to zoom in here and really show you, this is your pivot top right now, and you're getting close to that level. I've thought about shorting gold. I was going to short it here on a gap up. We ended up not gapping up, so I stayed back and didn't chase, and that's one of the key rules and methodology here that we dictate to you. The discipline to make profits on a regular basis is really number one. But in any case, this area up here will be double top resistance. Even pre-market on the next day here, the GLD was as high as 176 and change, which could signal a move even back to that level based on where that was pre-market. I wouldn't be surprised. So I'm kind of waiting back here and seeing what happens. I'm watching very closely. At the right time, I'll step up and short a little on the GLD, but only at the right time. I do believe gold will fall into the Labor Day holiday in the next few weeks, but it may want to go a little bit higher first before it does that, maybe to 176 and change. All right, so keep a close eye on that, folks. That's what I'm going to be doing for now. And let's take a look at a couple other charts here. What else is making a move today? Google, I think, is of key note here, dropping $20 on the day. So Google, again, very, very weak. Even in comparison to the market, Google is very weak. The reason what's going on here, folks, and this is your general short-term target on Google right here for major support. It almost got there today. That's at around 525 to 527. But what happened was essentially they bought out Motorola Mobility yesterday for quite a few $billion, and everyone seems to think they overpaid. How are they going to kind of merge it into their company? And people are saying, you know what, considering the markets are like this, I'm going to take it off the table or sell it, and that's what's going on there. All right, so nice little move there. Chevron and Exxon are down. JP Morgan, Goldman Sachs are down. Financials continue to kind of be lagging today. The comments from Sarkozy on a possible financial tax on transactions was not what the market wanted to hear either as well. So I think that's key. That would affect high-frequency trading. That would affect any just general transactions in the market, but only in Europe right now. It's not. It was proposed here in the U.S. a few years ago, but it was dropped because it would ultimately kill liquidity in the markets, and really there's a fear that it would really make the swings in the market even more wild because of panic and lack of liquidity. So we'll see again how it plays out there, but obviously the banks don't like to hear it, the financials don't want to hear it, and generally anyone who's a trader doesn't want to hear it as well. All right, folks, enough said right there. Come join the free trial of the Intraday Stock Chat of the Research Center. Join the pros to profit with the pros. Take care.